President Donald Trump has delivered another huge blow to the credit bureaus and FICO. If you did not know, President Donald Trump has been warring with the credit bureaus and FICO. And in the words of Cardi B, when you beef with Trump, it's forever. And so starting December 1st, he's making another move with his administration to end the dominance of the credit bureaus and FICO. So this war all started with one of the people in his administration, Bill Pulte.
Credit Score Bureau FICO in the hot seat lately after Bill Pulte, the director of the Federal Housing Finance Agency, took aim at the company in a barrage of posts on social media, saying in one, quote, FICO and other monopoly who has ripped off Americans for decades should not be using improper efforts to threaten regulators. The company's stock is down more than 20% so far this year.
Pulte also is making claims that FICO and the credit bureaus are retaliating against Trump and his administration with lobbyists, and that they are trying to make push to get his administration removed. But he's not the only one crying out against the credit bureaus and FICO. Also, Senator Josh Hawley.
Senator Josh Hawley wanted more accountability in the financial services industry. Now, in his second Senate term, he's again taking aim at the Fair Isaac Corporation, or FICO.
These are the credit score people.
Hawley told the DOJ, FICO enjoys a sweetheart deal from the federal government wherein its credit scores are required for loans originated with multiple government entities. Hawley says FICO has abused its government-granted market power.
Senator Josh Hawley is saying that they're using their government-given backing and authority for mortgages and other government funding as a standard to weaponize it, to be able to monopolize the market and to raise prices and force everyone to pay them the price that they dictate. Now, FICO and the credit bureaus are saying they're being unjustly targeted. Now, do you feel that they're being picked on? Drop your opinion in the comment section, because in this video, I'm going to break down the new push of the Trump administration taking place December 1st to help end the dominance of the credit bureau and FICO. And also together, this is making 4 big changes that Trump is making in credit scores in order to cancel the credit bureaus. Now, if you like credit information, make sure you subscribe to my channel. Also, go to my website where you can download this free heart inquiry removal package for free. The link is in the description of the video and in the pinned comment section. Now, this first huge change taking effect now after December 1st, 2025, Trump and with his administration controlling Fannie Mae, now they're removing the 620 requirement for underwriting credit score in order for you to get a home. Now, here's the detail to those housing updates. Fannie Mae scraps minimum credit scores for DU loans. Fannie Mae has announced it will eliminate the 620 minimum credit score required for loans processed through its desktop underwriting DU system, effective November 16th, 2025. The change, detailed in the last DU version 12.0 release notes and selling guide updates, represent a major shift in mortgage eligibility and could help move borrowers with lower credit scores but solid financial qualified for loans. Bill Pulte, U.S. Director of Federal Housing, noted on Friday on his X account that this would be a small change for underwriting, but a bigger deal for consumers. Our underwriting standards are the same, Pulte said on an X post, as a process matter to ensure 2 scores can be used and not just one. We eliminate the requirement for FICO in the infamous guide, big deal for customers, small or nothing deal for underwriters. Instead of relying on a hard credit score cutoff, DU will now evaluate a broader set of credit risk factors, including a borrower's credit history, income, debt levels, property characteristics, and loan purpose. The DU risk assessment reflects a comprehensive evaluation of credit risk factors from the borrower's credit report, along with non-credit risk factors from the loan application. The minimum representative score required of 620 will be removed for new loans case files created on or after November 16, 2025. This requirement will be replaced with a minimum credit risk standard based on the credit risk factor evaluation within the DU credit risk assessment. Fannie Mae move follows Freddie Mac's, which previously eliminated its own minimum score for loan approvals. However, Fannie Mae clarified that the lender must still request credit scores for borrowers as required for loan sales, and certain loan types or private mortgage insurers may continue to impose their own minimums. The update also expands Fannie Mae Day One certain programs, offering lenders relief from enforcement of representations and warranties for certain undisclosed non-mortgage liabilities. Additional documentation and homeowner education requirements for borrowers without traditional credit will now be triggered only when no borrower has at least one credit or installment account reported. Now, this would give lenders options to not have a required credit score or FICO score limit amount. So before this, it was at a 620. Now this gives lenders more flexibility to qualify you for a mortgage, not depending on your FICO scores. Now, does this totally eliminate your credit scores? No, because understand you still want to currently work on your credit score, because it may not stop you from now getting that mortgage, but the lender could look at it for your interest rate purposes. So you want to keep that in mind to continue to improve your credit score. Now, with my elite credit system, users like Sean was able to go from a 612 credit score with all his credit scores over 770 in a matter of 6 months. And now he's at an 803 credit score. So if you need my help with my AI software and credit coaching, the link is in the description of the video and in the pinned comment section, because it also said some lenders can still impose credit requirements for their own overlays. With some of these banks, they can still require it, but this is going to give more lenders some flexibility who choose not to dictate on your credit score. But as I said, this can factor in your interest rate, and your mortgage can be higher, which may knock you out of the game to qualify for that mortgage, because if your interest rate is higher, then your payment is higher. So it's still best to work on those credit scores so you can save hundreds of thousands in the life of that loan. Now, the second huge change when it came down to the Trump administration and Bill Pulte accusing that the credit bureaus and FICO was working in collusion, it forced FICO to turn on the credit bureaus, causing their stocks to plummet. And now they are their competition instead of them just selling their scores directly to the credit bureaus. Now they're selling directly to the lenders. FICO surges as it cuts out the credit bureaus indirect sales plan. Credit score modeling company Fair Isaac Corporation, widely known as FICO, surged on Thursday after unveiling plans to sell its credit scores directly to mortgage lenders and resellers, cutting out credit bureaus that serve as intermediaries and rattling major credit bureaus stocks. Shares of Experian, Equifax, and TransUnion fell amid concerns that the move could erode their revenue. Mortgage lenders previously relied on firms to obtain credit scores will be able to buy them directly, reducing the dependence on the bureaus. Now, this is causing them to turn on each other, and now their collusion is broken apart. And now this is undercutting the credit bureaus and FICO, because it has its own competition that we're about to talk about. It forced them to turn against the credit bureaus to gain more of a market to save them and for their shareholders. So that's a huge push by the Trump administration to cancel FICO and the credit bureaus. Now, the next huge change is the rollout of banks using AI models. And now what is going on? This is undercutting the credit bureaus and FICOs, because now lenders are using alternative credit score models. Towards the new credit bureaus, how real-time models are rewriting financial inclusion. Credit has long been the passport to economic opportunity, yet over 26 million Americans have no credit history, limiting their access to mainstream financial products and forcing reliance on costly alternatives such as payday lenders or pawn shops. The paradox is stark. The system designed to measure responsibility often exclude the very people that it is meant to empower. This raised an urgent question. What if we can reimagine credit worthiness in real time using artificial intelligence and modern data infrastructure. AI and real-time analytics offer a way forward. Instead of relying on history paradox, modern leading platforms can access credit worthiness dramatically. This evolution turns credit scoring into a living system, adaptive, transparent, and reflective of real financial behavior. AI-driven models are transforming the definition of financial responsibility by incorporating alternative data sources that go beyond traditional credit metrics. Cash flow solutions to be utilized by Chase. Nova Credit, a leading credit infrastructure and analytics company, today announced that Chase has selected Cash Analyst to power its cash flow underwriting capabilities. Chase will also use Nova Credit Credit Passport to access and decisions with international credit data. These solutions will enable Chase to serve more customers across the United States who have limited credit history or are underserved by traditional credit models. Chase is committed to being the bank for all, and tools like Cash Analyst and Credit Passport will help its mission by giving us more comprehensive view into each individual and their credit needs, says Chris Reagan, president of Chase Branded Cards. With this new data source, we can better assess credit risk and make more informed lending decisions and approve customers with right size lines of credit. And Nova Credit isn't the only AI analytics software that is coming out. Plaid also is offering now a risk scoring model to banking institutions in order to give a cash flow scoring model for those to open up credit approvals for those that are underserved also. Now with Plaid, and when you have banks like Chase with Nova Credit, this is removing a huge base of income for the credit bureaus and also FICO. And the fourth major push, well, Trump and his administration has rolled out with mortgages as such as FHA mortgages and other government-backed mortgages to now have a variation in credit scores that are being used to get in more approvals. And now they are using Vantage 4.0 scores and FICO 10T scores. So prior to this, you had that the banks, when they are getting approved for government-backed mortgages, to use 3 credit scores. So they will pull all 3 from TransUnion, Equifax, Experian to try to judge you for a mortgage. And they will take your mid score, the one in the middle, but they will be looking at all 3 credit bureaus to see if there's any negatives on there. But now they are going to limit it down to 2. Now they're going to use Vantage score models, Vantage 4.0, where many people have a higher credit score on their Vantage scores along with the FICO 10T score. So this should open up more approvals for homes for more people. So with this is going to give you some flexibility instead of just looking at the credit bureaus and they had that captured market. And it cut a lot of people out from getting home loans. So this can be good for you. And these are the steps that the Trump administration is using to help cancel out the dominant of the credit bureau and FICO scores. So hopefully this information was helpful. If you have any questions or comments, leave it in the comment section. For more detailed questions for me, you can go to my website and all your questions go directly to my cell phone. I hope to see you guys in the next video. Stay tuned.